All right, good morning, good people. Um, December 14th, halfway through the month of December. We're closing out the 2024, preparing for the 2025. We have some great trade setups. Um, Chances are you're not where you want to be as a trader, but the great thing about it is you have ample opportunity to make some corrections, some adjustments, and to take advantage of the market going forward. Um, I want to look at a few trading opportunities, mainly with these JPYs. We've been drumming up the JPYs for a few weeks. Um, and, now that the 2 week candle closed, it closed exactly the way I expected it to close for a few of these bad boys. I know we talked, um, you know, when I was on the call Tuesday, and then I know we talked when Anthony was on the call. I mean, Andrew was on the call Thursday about the JPYs, and I was talking about this 2 week candle. For me, it was very important that this 2 week candle respected the top of the opening of the previous 2 week candle. I did not want to see an engulfing candle on the 2 week because I fully expect the market to push down. I expected us to bounce off of this imbalance and retrace. Now I expect to see another red candle push down, right? Um, I think that's going to happen on all of these JPYs or the big ones. Um, I think there may be some, it might look a little bit different for like the NZD, JPY, and the AJ. But for the ones that I've been trading, like EJ, GJ, UJ, and I looked at Chef J. I expect the same thing, and I know Andrew, you broke down the way you saw it. But I'm looking when the week starts. I think these candles will go up, take the high from this 2 week candle. That will put us right in the middle of a 4 hour imbalance here. There's a 4 hour imbalance right here. So if we go up and we take the high from that 2 week candle, it'll put us right in the middle of the zone, and I think we'll start pushing down. If that doesn't happen, I'm not taking a trade. But I do believe that that's what we're going to see, and I believe we're going to get a 2 week um, bearish candle, and I think that lines up on the higher time frames with what I expected from this 2 month candle close. I expect to see a bearish 2 month order block at the end of the month. All of that stuff is kind of playing out um, exactly the way that I um, foresaw it. And all I'm trying to do here is look at a bunch of different time frames and kind of mesh them together, correlate them. And you know, here with 2 weeks left, and 2.5 weeks left in the year, I definitely believe that that's what's happening. And I get it. Everybody doesn't see the market the same way. Respect to the way you see it, but this is what I think that's happening. And I guess time will tell if we get it. So in anticipation, I think we're going to get 100 and some pip move up. Maybe 200 pips up. We'll take out the high of this candle, and then we'll drop. Now, keep in mind, this is going to be a 2 week candle. So maybe we get the push up and move back. Maybe the first week it looks like a doji. And then the second week we push on down. But I think that's going to be crucial in your execution. You have to understand what you're looking for. Maybe it's going to push down first and then push up here. Or, if the market just takes off and it pushes up, then I look for it to push up and finish by about Tuesday, right? I always look for the first couple of days of the week to be a misguided move, right? If I'm expecting bearish movement, I want to see the first day or so push in the opposite direction, and then I want to see the reversal, the Judas swing, and the real move. So for me, that would look like a buy up first and then a sell back down, right? That would be the ideal way. Now, I'm not saying it can't sell first and buy up and then end, with the pullback. It can do that as well. But it just depends on what you're looking for as the trader. I think that's important because if you're looking one way and it does something different, sometimes that throws you off. If I look at this daily, we had a bearish order block. It can sell down first before buying up. But the end goal is to fill this imbalance and then pull back. And then the next week, I want to continue push down to these lows. And I'm almost 1,000% sure that we'll get that move. I just don't know the exact order. I know when I first started trading like this and I first started looking at these charts, sometimes I would get thrown off because it might do something early that I didn't anticipate. But then when I look back at the move, I'm like, man, it did exactly what I thought it was going to do. So I would encourage you guys, if you're trading one of these pairs, even if you're not putting real money on it, if you're just paper trading it or you're just following it, I would make my markings or make my notes on the chart, prior to the market opening, and then just kind of going back and looking at it periodically over the next 2 weeks. And if you want to break it down into a week at a time, you can do that too. However you analyze this candle, maybe you fib it, you expect to pull back, right, to this imbalance, and then a push up. All of that is cool, and I think that's very much an option. I think the pullback here before it buys up is very up an option. I mean, very much an option. But I think if you don't do your markups, or if you do not have a bias, then you're going to miss some valuable information, some valuable knowledge that can pay you next year or over the next couple of months. Because what I'm showing you is what I know that works. It's what pays me like pretty regularly. So this is an option if you want to see the charts or follow the move, whether or not you're actually trading real money on it. But I would really encourage you guys to kind of follow it, even if you don't trade it, because this trade setup, right, is not only going to pay off over the next 2 weeks, but then starting the new year is going to really start paying off. Because if this does close bearish, like I think it will, you're going to have a bearish 2-month order block, which we had on last year on UJ, right? Which we had last year on a lot of those JPYs. So all we need, right, and we need UJ to come on, close down strong, but all we need is that bearish 2-month order block. And once we get that bearish order block in January, it's going to buy up, and then I believe after it buys up, it will sell off. And the difference between this January and the last two, because this was a bearish order block in December of 2022. This was a bearish order block in December of 2023. All right. But the difference in this order block, if we close bearish, is we're closing below the moving average. And what you either believe it or you don't, but we going to the south. After it buys up, we'll go south. Here, it bought up and it kept on going. But the difference on this one, when we close bearish here, if we get a bearish close, we'll buy up, and then we will do what I've thought we were going to do the previous 2 times, which is cook off. I think the fundamentals have changed. I think there's a clear imbalance that we could target. I mean, you can see that's like a $25 move. It's not going to happen overnight, but it gives us a solid direction to trade in once we get the signals that we need to get, right? Does anybody have any questions over the JPYs?
Is that all of them, or just using DJ?
Well, I think every one of them is a little different, right? But I think they're going to all end in that direction. Now, EJ, GJ, UJ are very similar. Chef J is very similar, right? If I look at Chef JPY, is very similar. Now, when you get into AJ, um, it's down a little bit further, and NJ, right? They're down a little bit further. So their movements will be a little bit different, right? So I think that those are different trade setups that you have to kind of go and look at those various charts. You see how this 2 week candle ended in a basically a hammer, right? Where it looks like price is going to push up. So there's an imbalance right here. I personally would not trade this pair over those other ones. To me, the other ones are an easy setup. Now, you might be trading NJ or AJ. So I'm not trying to discourage you from doing that. But what I'm trying to say is for me, the easier trades are GJ, EJ, uh, UJ, and Chef J. But I prefer those other three over the Chef JPY. But it is what it is. Those are trades where we just got to go up and take out the high and push down. Um, you know, whatever you're trading, you have to kind of understand what you're looking for. Where is your liquidity? Where is your target? Because we all know it's not just going to the target. It has to take out the liquidity first before it heads for your target. Does that answer your question?
Yeah, answer my question for sure. Somebody asked a question in chat too, and said, "What do you mean fundamental change?"
What do I mean when I say the fundamentals have changed? Okay. So prior to this year, fundamentally speaking, we had a very strong US dollar. Why was the US dollar strong? Because we were in a fiscally tightening cycle, right? We had tight fiscal policy, higher interest rates. We were discouraging loans. We were discouraging people and companies from borrowing money by making it more expensive, by making money more scarce. While we were in a fiscally tight system, Japan has been in the fiscally loose system, where they had zero, or they had a -10 interest rate, -10, right? Where they encouraged the borrowing of money and the investment of money in foreign assets, right? You have a -10 interest rate. You borrow money in Japan, you had a -10 interest rate. So you can borrow money in Japan and you can buy the US dollar and you would make a whole bunch of money, right? Because the longer you held on, the longer all you had to do was service that loan, which was a negative service rate, which you was getting paid to have that money. And you invested it in the US dollar, and the US dollar was going higher. Let's look at the US dollar. Let's look at the Dixie. So the US dollar was going higher, right? And then it got to its peak and it broke down and it's been going sideways. But we changed our fiscal policy during the Jackson Hole Summit. Y'all remember the Jackson Hole Summit?
Yeah, I remember we talking about this.
Okay, now y'all remember me talking about it, but I always talk about this stuff. I mention it to you guys so y'all can look it up. Like you have to, if this stuff, if you want to make money with this stuff, you're going to have to kind of follow the breadcrumbs here. This year during the Jackson Hole, every year we have a Jackson Hole meeting in Wyoming, and we have the Fed chair, right? The Fed chair gives a speech, and this year when Jerome Powell gave that speech, um, he said now is the time that we have to switch our policy stance, right? And he basically said that we're going to transition from a fiscal tightening policy to a fiscal neutral or a fiscal loosening policy, right? They have held interest rates high for 3 years. We've all been paying expensive prices for 3 years. It's the reason why we elected Trump. It's because we can't afford our life. Remember, that's why people elected a different leadership, because they can't afford to live under these tight economic conditions. They're fools for it, but that's because they don't understand what caused those economic conditions. They don't understand that spending $8.8 trillion made us have to raise interest rates high. But we're about to get some understanding, y'all. We're about to get some understanding because we're about to spend more than 8.8 trillion. But anyway, um, so whenever the Fed said, hey, we got to change our fiscal policy, now it does not pay to go borrow money in Japan and invest in the US dollar, because the value of the US dollar is going to decrease. And at that same time, the Japanese financial minister raised interest rates. He's raised them twice since then. Their interest rate used to be negative 0.10. And now it is like maybe positive 0.10. Our interest rate is still higher, but if you look at the projection, our interest rate is due to decrease, and theirs, because their inflation is getting higher, theirs is projected to go up. And the markets run off projections. So with that in mind, you can expect to see the dollar against the yen start to lower, right? And it's not just the U.S., it's the West. All of the currencies in the West. Everybody has been dropping their interest rates. The CHF dropped their interest rate. Did y'all see how much they dropped theirs? They were projected to drop them 25. They dropped them 50. That's why the bottom fell out the CHF. So we just have to kind of keep in mind and understand the overarching narrative in the finance sector, right? Politics is cool, but you got to understand the overarching narrative that's going on financially, right? This we all suffered from high interest rates. It's not just the United States; it's every country has suffered. So now every country is recovering by increasing liquidity, right? It's the whole reason that we're in the middle of a bull run in the crypto market and the equities market, right? Y'all do understand we're in the middle of a bull run, correct? Everybody understands that the markets have been going straight up, right? It pulled back here and went straight up. Now, notice that pullback was in the summertime. But since then, we've jumped back on that rocket ship to continue this bull market. You can only continue these bull market when the liquidity is there, right? When some company is doing economic relief, some countries are lowering interest rates, all that good stuff. Does everybody understand that? So this is what we mean when we say the economic conditions have changed. The fundamentals behind the economics have changed. This is why we can look for the markets to do what the fundamentals are saying they should do, right? The fundamentals are saying that the interest rates are dropping. That's what the Fed chair is doing. He's dropping the interest rates. So we should see housing become cheaper. The housing mortgages become cheaper. They haven't became cheaper yet because of the projected policies that our new president is saying he's going to do. When you add tariffs is just another way to say we're adding a tax. Life is still going to be, it's going to get more expensive if we add tariffs. When you deport the illegal workforce that we have in the United States, that means you have to pay the legal workforce. And instead of underpaying the illegal workforce, you got to pay a legitimate wage to the legal workforce, which is going to make things more expensive. So that's the reason that these government bonds pushed up, right? But there, it has signaled that it should start to drop. If you look at the chart on the Dixie, I think we have another leg up to this imbalance. This is the imbalance that we were looking for as price broke. So we have a leg up to this imbalance. I believe that we'll make it here, and then I would expect, the dollar to start pushing down after that. And if it doesn't, we have a lot bigger problems than we anticipated. Because if the interest rate goes through the roof and the stock market and stuff goes through the roof, you're going to have real insurrection, because you're not going to be able to afford anything. Only people that's going to be able to afford stuff is me, my brother, and the rest of the rich people. because we know how to buy uh, assets like crypto. We know how to trade up. You know what I'm saying? So poor people don't trade. Poor people don't invest. So all they're going to understand is, geez, man, everything is super expensive, and we can't afford it. That's all they're going to understand is gas prices are going up, food prices are going up, rent is going up. They're not going to understand how to make their money go up with those prices. Everybody understand that? And then you're going to see like probably a pretty good rebellion here in these United States. I'll be watching it, from from my baby's house in Colombia. But
Man, you ain't going over. I done told you that 4 times,
hey, I'm just
man. You
telling
ain't
you,
gonna
bro.
believe it.
Hey, I can show you, but I can tell you. But it's going down. It's going down. So we hope, I hope that this last leg up, we'll see a drop, because if not, then we in trouble. Terry, you said Argentina. Argentina's cool too. Argentina's cool too. It's cheap enough. Um, you know, I would tell you that I heard they didn't like black people, but the U.S. don't like black people, in my opinion. So it doesn't matter. I don't think any person should worry about where they don't like black people and they live in the United States. Um, but I also would tell you that take sand to the beach. I encourage that, because not that you have to, but if you show up with sand on the beach, then you chill, you good. All righty, good folks. So I'm gonna look at these million pip pairs. And this is troublesome to me. All right. I I always like to mark the highs that we run, because to me there's a difference in wicking these highs and actually running the highs. And what we did now was we wicked some old highs. So you already know what I feel about wicking these old highs. If I just looked at this chart, I want to see price come down to this level, because we could have closed above these highs. We could have closed above them, but the market chose not to. And whenever I see these prices get wicked, I think there's tremendous opportunity, to go the opposite way. If I can collect 700, 900 pips to the opposite end, then I'm great with that. So this is not we didn't wick any highs on this, but what I would look for if you're trading a EN, I think both of them are going to go down south, but I do think that there's different. I think that I would look for this price to take out one of these two highs before it pushed down, but I would just fib this green candle and I would look for price to take out the high and then sell down. Because even if you're just looking for this pullback, I believe you got about a 330 pip trade. These are these are very simple setups. If you see the market from a great distance, like this is a 2 week chart, it might take 2 weeks for you to get these 329 pips. It might not. But the point is, if you see the chart setup, and once your liquidity is ran, right? Once the high gets ran and you see a wick on it that wicks out this high, now you can get into the trade and you can trade to your target. It doesn't matter how long it takes to get back to your target. We don't control that. We just control that we understand the setup, we get our signal, we see our signal for entry, and we get in the trade. Right? This trade is very much like what trade was that, Lavar? Did we trade a GN? Did GN do that?
Yeah, GN did it.
Yeah, yeah, okay. So this is the same setup that I think we had on GN a week ago, where we wicked this high, huh? And then we traded it back down.
Wait, so yeah, I can see something. This is good anyway.
What's that?
So this is good.
Yeah, yeah, yeah.
The EN and the GN, they are good.
Yeah, yeah. So all I'm saying is however you see or you trade, you're just waiting. And I like these candles that are full because it lets you know since we didn't wick out, it's either gonna it's either gonna target this high or this high. And once you see the wick at those places, it's going to line up. Trust me, it's going to line up probably with London session, or some major New York session. It's going to be one of those sessions that you get your wick, and then it's going to be on and popping to go to the other direction. So it's just a matter of you being there and understanding what you're looking for. And what I like to do is just throw a horizontal ray at the high that I believe is going to be the target, and then you just wait. And the worst case scenario, it doesn't happen, right? The worst case scenario is it doesn't happen. So you don't take the trade. But if you don't come into the market with a plan, you're probably going to get cut up. All right. The USD pairs. Okay, EU and GU. I still want price to push up for both of these pairs. GU closed with a bearish 2 week order block. So I know it's going to push down, but what it could do is just push down, maybe wick this low or not break the low to push back up into this imbalance. I think that me personally, I like this setup a little bit better. We got the bearish OB. I believe we'll push down, maybe not break this low. I still look for us to come back to this level before going lower. I think this is in line with the dollar going up. If we looked at the Dixie, we're looking at the Dixie going up. I believe that this is going to go lower. I would like to see us buy up first, right? I would like to see both of these buy out first into this imbalance. I think it's coming here before it sells. Same with this pair. I would like to see it buy up first into the imbalance and then sell, which would be cool. To me, it would match up with the Dixie needing to do the last leg up before we change directions. All right. When I look at this setup, right? When I look at this setup on the higher time frames, it's really going to depend on where we close. So we buy up and we push down, uh, and we close as a bearish order block here. I don't want to ignore the fact that this candle, right? This candle is part of a bullish order block that this would actually just be tapping into. And then we could see upward movement.
That is a bullish order block.
Yeah, well, I agree, but some people ain't gonna see it like that. That's why I'm kind of pointing it out. Some people is just gonna see this bearish order block. And what they're gonna ignore is the fact that this is really a bullish order block, and we got to pull down into that order block. So this is how I'm. That's why I'm just calling it out. I know everybody's gonna see what they see, but if I'm looking at this move, I'm measuring from the bottom of this wick to the top of this candle, and then we get a pullback. So right now we're about at the 78%. So
Can
maybe
we go to EU like this with the same time frame?
okay. Even if we push down, I think we're going to come back and close or be somewhere around that 78. All right. EU is a little bit different setup, but to me it's the same. We have the bullish order block here. We have the bullish order block here. We have the push up, and we get the pullback into this bullish order block. This is all, if you look at this on a big time frame, this is internal liquidity. So when this price comes down, eventually wicks out. When it's eventually wicks out, you're going to see the wick that takes the liquidity. Or if you look down into the order block here, there's an imbalance that this candle has to come down to fill. So if we're in the 3 months, what's 2 time frames down?
1 month.
I don't know if it's 1 month. Yeah, there's still an imbalance. So here's the imbalance from here to here. So you can see that we've not yet pushed to the consequent encroachment. But if you get the halfway point, that's going to be consequent encroachment for the 1 month. There's still, let me see.
But have we tapped into the imbalance yet? I think so, right?
Yeah, we've tapped a little bit. Yeah, we've tapped it a bit. We've definitely tapped it a bit. But what I'm saying is, I think we're going to pull back and go a little bit further into the imbalance. So we'll see. But I think that if the further down you drop in your time frames, you're going to see that the imbalance is down there, right? And the 2-week picture, I like it. You got the -27 is right at the imbalance, and that would be this move down, us pulling back, right? We got to pull back up into our zone and then come down. To me, I'm just trying to mesh these time frames together. I'm not saying that it is going to happen like this, but what I'm saying is there's a good chance that this will pull back to our zone and then come to the -27. There's an imbalance right here. There's an imbalance right here. Hopefully, I'm not confusing people. Is anybody confused?
I mean, I'm confused, but I'm not confused. Just one confused.
Okay.
Okay. It's like my second time looking at it, but
okay. Let me explain.
Yeah.
So when I look at this entire setup, right? I'll go back to the 3-month chart. So on this 3-month chart, we have a 3-month bullish order block. We have price that bought up, right? It came and touched the top wick. But we understand that inside of this order block, there are, I don't know, probably billions of dollars in orders, right? Which imbalance in this order block, the further down you drop in time frame. So this first pull down was to the top of this candle, which closed a little bit of the imbalance. We get a reaction, we push up, right? We push into this and close this imbalance. We come back down, we push deeper into the imbalance and reject. You go a little bit higher. When you come back down, we're pushing deeper into the imbalance. What I'm saying is this line to me would represent consequent encroachment, at least on the 2-week chart, right? On the higher time frame. And maybe you get a larger reaction. So I'm just looking at this move, this trade up to push back down into the imbalance. I'm trying to find out where this move is coming. So I can't do anything about the longer range, like whether you expect it to break this low or you expect it to rebound and go higher. All I'm trying to say is on the 2-week time frame, right? On this 2-week time frame, when I open it up and I can see inside these candles, I see clearly there's an imbalance right here. And that imbalance is where I think price is pushing down the close. I also see that price started here, it pushed down and it broke structure, right? It broke this structure. So when I get a structure break, I like to see a pullback. So I'm going to put a fib on that.
You like to see a pullback back down into the imbalance before it makes its move.
Well, I want to see a pullback to the discounted zone before it pushes down. So this pullback,
Nice.
huh? So this pullback, there's my golden zone. There's my 78. It can pull back to any imbalance up here, or it can just pull back to this order block, which is also a supply zone, for you supply and demand traders, right? We can pull back to that zone and price can push down. That's what I would think that's going to happen based on this trade setup. I would think that we pull back to this zone, right? And then push down to close this imbalance, which, it's logical because of the setup that's on this 2-week. So this would be about a 600 pip trade, right? If it goes down to the negative 27, which a lot of people feel like it can, and that would close this imbalance, you have about a 670 pip trade. And I'm not saying that we're going to get all of these pips or you have to be a part of the whole thing. But if you have it kind of drawn out, the way it can happen, maybe it goes to consequent encroachment and then it doesn't get to the 50% of this pullback. Maybe it pushes down. Maybe it just goes ahead and pushes down. But you're expecting or you're understanding why it's doing that. Hey, this needs to happen. There's an imbalance up here that has to get filled. And then there's an imbalance down here that needs to get filled, right? So there are a few different options that can happen. We can pull back and push down, or we can push down to this imbalance and then go up to this imbalance, right? All I'm trying to do as a trader is kind of observe the price action and look at what I think is the next logical explanation or the next logical move. Andrew, did you have something different? You have a different way that this is a.
Not really, like I'm not really looking at this like down. Of course, when we are moving. Just one thing like EU and GU are doing is the divergence of a thing, So the reason why EU is way down is because GU, just like GN and EN right now, So they always take out high, but this one is kind of different, So like this one, it moves faster because it doesn't take out highs and it just moves way down, just like the EN and GN. So that's why I said I like the EN and GN, like the current situation right now. So I might look at them this week,
Yeah, I like the JPYs better, but yeah, sometimes you can catch a trade. Maybe you catch a trade on a Tuesday on EU because you're aware of what needs to happen, or you see the move setting up, or you catch this trade on a Wednesday and your EJ or your GJ trade isn't ready. EJ and GJ doesn't pop off until Thursday. It just gives you an opportunity to take advantage of two different moves that week, maybe.
Mm-hmm.
I still maintain you only need one trade every week. But if you can catch two, that's good too. But you're not chasing it. You're just waiting. You've done the analysis. Now you're just waiting for the trade to hit your area.
I think everybody has to have that mindset at this point, because trading every day, I mean, it's not like it's difficult or it's hard or something. It's just like you are just, I don't know how to put the word, like it's not like wasting time or draining your energy or something. It just like it's like you're just chasing something, Just relax because trading you don't have to like be like chasing it, You just have to relax, and that is when you perform better. Like trading once or twice in a week, I think is the best idea, And this trade might just give you like 100 pips or something, or even more, with one trade or something. So I think that's the best option. So for me, this is what I'm trying to like, put myself in now, right now. I just want to like, in fact, maybe catch 100 pips in a week or 200. Then I'm good for the week,
Exactly. Listen. I mean, to me that works excellent, man. And especially for y'all who are trading your own money, man, 100 pips a week, man, you can change lives.
And just to add, the more that you're looking at the charts, the more you're going to trick yourself out of a trade.
And we know some of y'all like tricking.
Shut up. It ain't tricking if you got it.
They ain't tricking if you got it. But hey, all I'm saying is, if you look at it and you mark it up, whether if I put a ray with an alert here and a ray with an alert here, and I forget to look at EJ or EU, and it hits my alert down here, and I look at this chart and I see that we just made a beeline for this imbalance and we bouncing, this would be my next target, right? I would trade it back up to that level because we haven't been back there yet. So all I'm saying is, you don't necessarily have to be right in your analysis, right? You're observing price action. You're looking for for zones or for areas that need to be mitigated, and you allow the market to dictate when it's going to mitigate. Like when this market pushed up and it left this imbalance and it broke this high, we know the market needs to come back down here, but we can't control when it comes back down here. So once this pullback, you could have been saying, hey, man, this is going to pull all the way back down here, and it never did. It pulled back a little bit and then went higher, higher. Now we coming back, we broke this structure. For me, the logical place that we need to come is down here. But I don't know if it's just coming straight down or if it's going to pull back before it comes straight down. And I don't care. It can do either because I see an imbalance here. I see an imbalance here with a zone here. I know if it pulls back, I would like to see it pull back from this move. I'd like to see it pull back to the discount before I take a trade going down. So if it just shoots down, I'm not going to be a part of that trade, at least not on this time frame. Maybe you can catch it on the 4 hour or something. You can get a good pullback and a sell down. But my point is, you set your alert. Once your alert goes off, now you have the advantage over the market, and it's not the other way around. Because once your alert goes off and prices in this area, then you understand that, hey, man, the next area is back up here. There's an imbalance right here, and then there's a order block right here. So I would think that at least I can trade price from here back up to this imbalance. I'm sorry, go ahead.
Yeah, I was gonna ask. So are you just, I guess, exercise wise? I'm trying to kind of figure out when you're looking for which direction you might be going in. Are you just finding imbalances throughout which movement you're making?
Well, hold on.
Direction.
Me and you talked about three things for the trade setter, right?
So order block,
There's,
First,
there's an order
imbalance.
block. There's an imbalance. There's your break.
And your break structure.
There's your break. Order block, imbalance, break. So to me, once we wick out right here, this wick right here, this rejection, after we have an order block, an imbalance, and a break of structure, it's a key. So I'm going to think that the market wants to push back up to clean up this imbalance that it left.
I got you. Okay.
So when I look down here at this 4-hour chart, I want to see. Here's my breaks over here, right? So I want to see the market change directions, right? So maybe this up move didn't do it, but we pushed up again and maybe we broke these highs. So maybe that's a chalk, right? And when I go down here, maybe that's a chalk and maybe this push down to take these internal lows is telling me that the market is pushing up now to the imbalance, right? To one of these imbalances because that's where we broke the structure. But I have to wait and allow price to dictate and show me that, hey, man, this is exactly what we're doing. On the 2-week chart, it looks very clear right here. But I have on the lower time frames, they have to turn and show me that they're pushing up. They got to start breaking structure to that upside. Does that make sense?
Yeah.
And until that
basically,
happens,
this is-
I can't do nothing.
I guess
this is when we-
what my one confusion is that, so I get that, right? I get the 3 points. How are you determining the direction of which from the imbalance? Meaning, since the one down there, right? So how are you determining the reaction off of that up, and then the other one you're determining that's a reaction up going down. Like I guess that's where my eyes are still kind of
Okay. So I used to teach something called framing the market, right? Where you had your order block on the below price and your order block above price, because your trade is going to take place in between those order blocks. For instance, if you have an order block right here, this is going to be the high of the market until your price breaks this order block. You can expect to see the trade go from this order block maybe to this order block, right? If you see this as an order block, if you see this as a doji candle and this is a bullish order block, then you would mark this area in this area, and you would expect your trade to take place in between this area. So if I'm just looking at this chart with my naked eye, because of the way that this candle closed, I would probably expect to see price push down unless it broke these highs, right? I would expect to see price keep pushing towards this order block. Now, we're on the 2-week time frame. There are other time frames that we can go to. There's a 1 week that shows you, to me, this is an order block. This is a bearish order block. So I would just figure out where the imbalance is on this candle, right? On this pullback, and I would look for a short from the pullback. You can go down to the daily, and you're basically seeing on the daily chart that if you had marked up the area up here, you see a bullish order block right here. Price came down, right? It tapped into these wicks and it rejected, and it gave you a bullish order block, which tells you the price needs to come back up. So if you fib from this wick to this wick, let's just do it. I'm going to move this blue box up where the golden zone is, because I want to just find out where any imbalance might be in between these areas. I'm on the daily. I have my 50% of this move marked. I have my 78. So if I drop down to the 1 hour chart, that's about 2 time frame difference. Now I can find out in my area, if there's any imbalances, right, that this price is going to draw to before I would want to see it pull back to this area, react to that imbalance. You see that imbalance? Let me delete this. You see this imbalance right here?
Yeah, I see those.
It's right in the middle of my zone. So this is a great target for me to trade price to, or wait until it gets here. However you trade, wait till it gets here. And then I would expect to see a reaction, a rejection, a chalk. That price is going to go back down. That makes sense. In my zone, I want to drop down 2 time frames. That would be the 5-minute for me, and I would want to see a chalk, a bearish chalk, change of character, showing me bearish price action. Then I could take me a sell from here. I could target this low, but because of the higher time frames, I would probably target this area.
Right, I got you.
Does that make sense?
You got you. Okay, so that's a 78. That's a golden zone. Okay.
And listen, I don't want to this, none of this, it's not like I have a guarantee that price is going to respect that zone. So, well, and this is what I think people kind of get confused.
Actually, yes.
Yeah, so it's not like this guaranteed that price is going to respect my zone and do exactly what I think it's going to do. But this is just a guideline, a guide map for me as a trader to be consistent, right? So at this zone, if I drop down to that 5-minute and I get a chalk, I'm selling it. Every time I'm going to sell it. If I lose a trade, so what? It's part of the game. It's tuition.
You
I'm selling it.
you have to lose because coming into the market, you don't even think about winning. It's how much am I willing to lose today? Because
That's it.
it's part of the game. So that's why risk management is there. Because thinking about how much I'm going to make, bro, you just lose all your money, not even your. So you have to think, how much am I willing to lose today? But with that mindset, you will see probably you're not even going to lose any dime before you hit your target for the week or for the month or for the day. So it's always like this. Then when you are thinking, how much am I going to make today with this trade? Then you are fucked already. Because now your eyes, your mind, everything is all about that money. And if it doesn't go your way, now you fucked up your psychology because it wasn't what you were expecting.
Does that make sense?
Yeah.
And it's the reason why whenever I try to when I show people what I do, I always want to start them with order block, right? A weekly order block, a 2-week order block, because to me it's the most stable way to go about looking for your trade setup. And it doesn't always the price doesn't always do what you think it's going to do. So if a few weeks ago I pointed out this order block to you and told you to wait for to mark up your golden zone and your 78 and wait for price to pull back into it before you take a trade, you would have never had a trade because price only took off. It never came back into the zone. And that's okay as a trader. Sometimes you're going to mark your charts up and price will never see the zone that you marked up. That just means you didn't have a trade this week or for this pair. Maybe you marked up 3 different pair and another pair did exactly what you think. Where we get in trouble as traders, we do our markup and price doesn't come to our area, but we still insist on taking a trade. So we get into it in a different area. And then when the market chews us up, we end up, we're mad. But all we have to do is stick to our guns, which is why I like looking at several different pair and then kind of narrowing it down to the ones that I like the best. And that's why whenever I talked about the JPY pair, it doesn't matter. I'll just pull up EJ because to me, this pair I'm not going to trade this pair until this high is taken out, right? I'm not trading EJ or GJ or UJ or any of these JPYs until the high of last week's the last 2 week candle is taken out. So I want to see price go up and take that high and reject. Now I'm interested in selling this down because what I wanted to happen, it happened. Like I'm only interested in price when it gets to my area. And for me, if I drop down to the 4 hour chart, when price takes out the high of that last 2 week candle, it's going to be right here in my 4 hour zone. See that imbalance? So it all lines up for me. And then I'm comfortable with taking this trade. And if I lose this trade, I'm not mad because everything lined up. And all I would say is Big Brother got me if I lose this trade. All right. Do we have any other questions? Anybody trading something crazy?
I'm not trading something crazy, but you keep talking about the JPYs, and I was looking at EJ, and you're looking at the 2 week order block, which is telling you to wait and basically not take a trade this week. And I'm still on the weekly order block that's telling me
I didn't say
trade it to the 50.
I'm not
and
saying I
then-
wasn't going to take a trade this week. I showed you from a higher time frame. Let me see, the 2 week.
I'm saying you imply you're not going to take an EJ trade this week because you're waiting for it to go higher. And what I believe is that my sell trade happens before it buys up to your high.
Listen, Kenya, you're 100% correct.
Okay.
You're 100% correct. It is going to sell down before it buys up.
Okay.
But what if this trade opens up and buys up first? Then what?
It would be just like UJ did me last week, and I'll watch it from the sidelines and text y'all in the chat.
Well, that's cool. Or you can wait until it comes into your zone, because if it buys up to your zone first, you know why it bought up. It's here. There's your zone. Maybe this liquidity is closer and more efficient to get first before it does the same, before it sells. That's what I was saying. The same thing on this EU trade. The reason I show you this 2 week order block is because it closed just like that 1 week did. But what I would ask any trader is which time frame is gonna win, the higher one. So if you understand what needs to happen on this higher time frame, then that lower time frame won't screw you. Whereas we normally just trade down into that weekly pullback, like this weekly order block, you might have traded down first, then buy it up. But this week, you might get just a push up first. And then on Tuesday or Wednesday, prices up here and it starts selling. You're like, oh, what happened? Well, what happened was that 2 week order block had precedence and it started working. It started doing this thing despite that 1 week order block, because I still think that we're going to end up as a bearish order block at the end of December. This might be like mind-boggling to people who don't really try to correlate the time frames, but I just want you to be aware of what's going on this 2 week order block, or this 2 week chart, because it closed the same.
Wait, hold on. Which time frame were you right now?
This is 2 weeks.
No, before this one.
2 months.
Oh, okay. It's good.
Yeah, I just want you to see it from a different perspective, Kenyon. I'm not saying that you can't take that 1 week, or I'm not going to take it the 1 week trade. All I'm trying to say is there are 2 ways that this can shake out. Again, this candle is very full. Is it logical that we take out the top of this candle and go into this imbalance first before it sells? It can happen.
Yeah, I don't disagree with anything you said. I just wanted to confirm that I wasn't missing something else.
Okay, yeah, I think we're on the same sheet.
Okay, thanks.
All right.
Go to G card.
G Kitty Cat.
Yeah, I just want you to go to G card for Effie.
For Elfie.
Mm-hmm.
Hey, Elfie.
Is she on here?
Total Bay. I see Total Bay. Total Bay, what's up?
Time. I'm here.
Mm-hmm.
Why?
we read.
I don't want to see GCAT. GCAT pissed me off.
No, so you know that like was it yesterday or something? Yeah. So because this pair is something I don't trade. So today I have to sit down, take a look at this pair very well. Just because of you, because you brought it up yesterday, so I was like, my head was in the middle of other stuff. So today when I look at the pair, it's selling.
You knew this was
Because
going to sell, right?
Yeah. From
Elfie,
the higher time frame perspective, it took out the previous month high, right? He get to the previous month high. Just go to the monthly time frame, I mean, yes.
but Elfie knew this was going to sell. There's no way she didn't know this was going to sell.
I was trying to buy a pullback, but it never, like, it pulled back a bit. I was hoping for it to pull higher.
You say you're trying to buy it, but that's
Wait, Ty, can you go back to the monthly time frame?
all right. Go
on
ahead.
Friday, yesterday.
So you
Today's
see this
Saturday?
low right here? Can you see it, Ty?
Yeah. Okay.
Mhm. I think we are going to take out that low before we might see a buy. So basically, on this price leg, there is nothing, I know like we always see market like this, hello, something like this, like a structure to the upside. Then this will become a new other block for, many of us or everyone there. You still have to look at, look at the other way around, because if you understand what this market is doing, like seeking liquidity, this is a low right here. So when we come into this area, let's say we respected this other block, right? So we moved away. You see, the high hasn't been taken, because normally, what do you expect if we are bullish? We create a high, low, we need to create a new high, right?
Mm-hmm.
So we failed to create a new high. So it's coming to seek this low right now, before that high you are expecting to create will occur. This is what GCAD is going to do. Plus, it just tell you that I'm coming for this low, because it took the previous month high. And if you go down to the was it 4 hours? I think so.
You said 4 hours?
Yeah, I think so. Yes. And yeah, like make the chart just the current price action so we can see. Because I already looked at the chart, today. Right. So I have some rules. Can you just make this area visible for us to see? Yes. This is a structure. Yeah, you can just do it like that. The structure right here. We make a high, we make a low. This was a retest. So you cannot see this low wasn't broken, right? Then we created a new low right here. If you go to the 1 hour, right, then go back a little bit so that we can see, yes, this is it. This right here. So this low failed to break, then we create a new high. Not like, higher high anyway. So this is like a mitigation formation. So now we broke this low. Then we have this fair value gap. Of course, we just retested this area after sweeping this Asia high right here to keep selling down. So this price may just probably be selling until all that low gets taken. I had this area marked out from, I don't know which time frame it is, but I think we're not going to, or we might just respect it, bounce back a little bit, then keep on selling.
I agree. But I think Elfie saw it right here on this weekly.
Okay, thank you.
Total bag. Structure break, pull back.
Todd, it's title. When you say it, at least say it right.
Title bag.
Yes, thank you.
You just want to sound like Todd. That's
Because
a
it just sounds so, no, I don't. That's the thing.
title bag.
Mm.
Loke, say,
I really just wanted to do a little pullback on Friday, which it kind of did, and then it continued. But yeah, anyways. Thank you, Andrew, for putting me on Front Street.
You're welcome.
anybody else trading anything crazy? I know you go boys and girls was killing it. Anybody see a thing with this liquidity grab? That's a liquidity grab.
So basically, in this information, the price is not even going anywhere right now. We have this. I mean, this candle is so huge, but this candle is also a bullish candle, even if it closes like this in this. It was 2 weeks, right?
Yep.
So this new 2 weeks will determine whatever the price may, I think we are still going higher either ways.
Well, we got to get this low first. You see this though, they only have a wick. We coming here.
Yeah, I saw it. Yeah, we didn't have a week on this candlestick yet.
These market makers do a great job setting these charts up, man. This area right here needs to be mitigated.
It's just I always say, right? I don't know whether we come down there or not. I don't care. The thing is that when we have a leg like this, then we mitigate some area, very important area, and we move the way. So I knew we were targeting this side. That was our target. If we did was it Wednesday or something?
Yeah,
Wednesday
that's a
Thursday.
liquidity grab.
Yeah, Wednesday or Thursday. So
Thursday.
as soon as we close there, then I'm done with gold. Even if I know we're going to sell. So, like I say, we failed to close above it. It's just a sign for me. That means where was the original move to the upside right here? So we are going to raid this low for sure. I mean, it can just respect this area and keep going, but that is always how market behave, and that's how I understand the market.
And when you raid that low, there's an imbalance right there.
Yeah. So it's just if like we close above this high, then it will just tell you, okay, probably we might just retest some area right here, or probably just keep going higher either way. But no, and we didn't have any fair value gap. If we close above this high, for example, then we have a fair value gap along the way. So that pullback might just be into the fair value gap and continue going higher. But there is nothing like that in this price leg up. So, which means, of course, we didn't even close above it. So even if there is a fair value gap, it's kind of irrelevant to me. So this low is next.
Yeah, we're coming here.
Yeah, because this candle didn't have like a week.
Yeah, and this right here was a chalk. Low. This is a new high. Immediately we break that low.
500.
That's a chalk. So we come into equal lows at least, which is right here.
Somebody say
What you
people
think
are
about
working.
2,500?
Say
It's not
what?
bad.
Well, hey,
I
even if
say,
we
what you think about 2,500?
listen, I would love to see it come to this area.
Bro, you are even talking about 2,500. I even want 2,000.
Yeah, hey, exactly. But all I'm saying is like just because we did this is just a fake move, man. We should have came back. Like once this came and went into that imbalance, you would think the price would keep going to seek the lower move, but it didn't. It just bounced. All this did was confuse people.
What is the US dollar doing right now, Dixie?
Well, it needs to go up. It just made a bullish two-week order block.
So
We need to
yeah, I
go.
mean,
We need to go
we
here.
haven't been respecting like gold hasn't been respecting this price anyway. But yeah, automatically we need to sell on gold. It's just like giving people headache.
Of course. But if you that's why it's so important for you to stick to your guns. Stick to your analysis and stick to your guns. Because this really should be a bearish 2-week order block. But this price still did what it's supposed to do by take out that high.
That's very important. Yeah.
All right. Any other questions? Terry, if it's
My
2,500, bro, you can get that timeshare in Mexico.
No, that's what I'm talking about, Ty.
But Terry, Mexico is a
Yeah.
bad spot in my opinion, bro.
I prefer Brazil. I'm thinking Brazil.
Bruh, the cartels are so. I mean, I can't mess with Mexico because you never know what week is going to be the death week. That's crazy, man. I mean, Colombia. They say Colombia.
Bro, like there is one of my friends in Cyprus. Yeah, when I went on vacation to see him, so like we were talking to him, man. I I don't know. I think I want to move back to Africa because I mean we make a lot of money, and he was just comparing something like 3,000 euros. Like Nigeria is like 5 million naira, because the exchange rate is so, shit.
Yeah.
So he was like, man, with 5 million, like you would be like a god, You would have
Exactly.
like securities, like
But where would you live? Would you
police,
live on the island?
everything. It doesn't matter, like different states
Yeah,
in
for you
Nigeria.
it doesn't, Andrew. But if you're a foreigner, if you're an American, a black
Bro,
American.
yeah, you can live in like Lagos Island or something.
Well, I'm asking, like, is it better to live on the island or the mainland?
I think island.
Yeah. See, and I think it's a little bit more expensive on the island, right?
Then you can just choose a different state, because then you don't have to worry about island, mainland, or something.
Yeah. The only disadvantage Americans have is our accent. Once they know you're American, price is gonna go up. Anyway.
No, bro. Like, I mean, something try to trick you sometimes, but like, of course, you you have to take the local, and as you like stay there more, then you understand like how things work. So it was like, man, I think I need to go back to Africa, bro, because Europe is like, it's a real ghetto. You are just struggling, working, paying bills, and all of this.
But I think I told you that a long time ago.
Bro, I mean, for me, I'm okay, but still, for me to be able to get rich, I need to move to some like cheap country, Iceland is
Of course,
very
bro.
expensive.
Nigeria, Kenya, Thailand, Malaysia, like any of those places where you can stack your money. And you don't have to live there forever. It could be like for 6 months, 3 months here, 3 months there. I mean, that gets a little bit boring, I guess, or or old having to move every 3 months. But if you can get 3 solid months and you're paying less than $500 in rent, bruh, you're gonna pay $1,500 or $1,400 or $1,200 in those 3 months, and you can make
This is
10,
like
15, 20,000.
it's in my plan, like so bad because you can always move around.
Yeah,
Iceland is always going to be home because so I'm just thinking about it. Like next year is around the corner, so I will just see because how much we make a lot of money from trading. So why can't you live anywhere you want to live?
exactly.
So 3 months, yeah. Then back if you are missing Iceland, then I can just come back or go to another country. So I'm thinking about it for real. Tired of this code right here.
But that's why I was on that YouTube today.
I don't really cook. I don't. There's no point.
You boys living life.
Look at the way he's walking around, bro. In Cyprus, oh my god. I was just walking like this. The nice, like, I'm always on like big jackets because of the cold.
Yeah. This girl right here, she was in Thailand for like, she was on an education visa, I think.
Okay, like student visa.
Yeah, and now she's back in the States, but she getting her stuff ready to go back to Thailand. Like these are regular people who don't know how to trade, who have to
And
find.
they are still living well.
Yeah, but bruh, like this is it. And if you here's what frustrates me about people like in this group is if you just tone down the volume on your trading and you take one trade every
a
week,
week, bro.
you can afford
I
to live
know.
anywhere in the world, bruh.
There
Like
is this dude I know, bro. Like he only trades 5 times in a month.
he probably
Realistically, let's be honest with ourselves. Does anybody make 3K or 5K in a week on their regular job or something?
no, that's the whole exactly. I say the same thing.
Bro, in a week with 100 pips or whatever pips or one trade, you can actually, make this money and just relax. You don't even need to trade again for that week.
Exactly. Exactly. But I've been saying this for months, maybe even years. If you started with $100 and you did the same thing, it would take you maybe 3 months to have an account that was big enough to make 3 to 5K a year. I mean 3 to 5K a week. But people aren't realistic, man, and they aren't goal oriented. They don't follow rules. Um, those are the only few things that you need to succeed. Any questions, comments? Everybody know what they trade.
So tired.
Tyler Beck?
I came in late. What are your faves for the week? Can you just repeat that real quick for me, please?
I like GJ. I like UJ. I like EJ.
Good. I was looking at EJ anyways. Okay, cool.
If I don't see nothing on those NZD pairs, like
Bro, trust me, man. I'm telling you, yeah. I don't even trade them. I don't like them in their way. But I think I will look at EN or GN this week
yeah, I
because
like those
that
too.
formation
Yeah.
is like it's a key. It's a key. So 100 pips is okay, 200 is okay. So you don't have to trade every fucking day in the week.
We'll see if they listen to you.
Okay, thank you.
All righty, good people.
Thanks, Todd.
All right.
Appreciate that. Yeah,
Yeah.
this me all year next year, man.
This is it.
Yeah. I talked to Hoss too, man. After we chatted.
You say you talked to who?
I saw it.